By now, you've seen what happens when trade routes fracture. You've seen risk reprice shipping. You've seen countries survive after being cut off. But none of that answers the most important question. How does oil keep moving when the official system says it shouldn't? Not politically, mechanically, because beneath the visible world of flags, ports, and sanctions, there's a second system built for ambiguity. And once you understand it, you'll never read an oil headline the same way again. Tonight, I'm going to show you the mechanisms that keep banned oil flowing and the signals you can actually watch when the system goes dark. Sanctions are designed like a switch. On, off, cut them off. But oil is not a switch. Oil is a river. And when you try to dam a river, it doesn't stop. It finds new channels. Once a producer is moving hundreds of millions of barrels a year, enforcement stops being a legal problem and becomes a capacity problem. To truly stop the flow, you'd need boarding at scale, global port denial, universal insurer compliance, and the willingness to absorb a massive price shock. Most economies can't afford that. So the system adapts into something more realistic. Pressure without collapse. Restriction without rupture. That's where the dark fleet begins. The term dark fleet makes people imagine a rogue armada. That's not what this is. It's not an organization. It's not a country. It's not a conspiracy. It's a behavior pattern that emerges when four conditions align. Demand stays high. Restrictions increase. Enforcement is uneven. And profit is large enough to finance complexity. Instead of one illegal pipeline, you get a modular logistics stack. Older tankers bought cheap. Shell ownership chains. Flags of convenience. Opaque insurers. Paperwork that changes faster than cargo. Not illegal in isolation. Hard to prosecute in aggregate. Here's how the system actually works. Oil is lifted from a sanctioned origin. The ship's tracking signal, AIS, doesn't disappear. It degrades. Short gaps. Signal drift. Identity confusion. Sometimes the ship broadcasts from places it can't physically be. Sometimes it borrows another vessel's identity. Not enough to vanish, just enough to introduce doubt. Because uncertainty is expensive. The tanker doesn't sail directly to a buyer. It moves into open water. There, it meets another vessel. Ship-to-ship transfer. No port, no customs, no clean chain of custody. The oil moves, the ships separate, and the paperwork resets. A new bill of lading, a new intermediary buyer, a blended cargo with a new declared origin. One shipment is split. Portions are blended with other cargoes. Now the origin becomes deniable. Oil is chemically messy. It can be blended. A sanctioned crude mixed with another crude becomes a new grade, a refinery feedstock, a batch with no clean fingerprint. At that point, enforcement stops being a legal problem and becomes a laboratory problem. It's like dropping ink into a river. Then comes jurisdiction. Ships can change flags, operators, and beneficial owners faster than regulations can respond. A vessel might be owned by one company, chartered by another, managed by a third, flagged in a fourth country, and insured somewhere else entirely. Each layer is a firewall. By the time an investigation starts, the structure has already changed. People think navies control trade. They don't. Insurance controls trade. If Western insurers won't cover a voyage, alternatives appear. Smaller insurers, regional underwriters, offshore structures, coverage that only ensures the next leg of the journey. Risk doesn't disappear. It's redistributed into thinner balance sheets and shorter time horizons. This is why enforcement hits a ceiling. Shut it down completely, and oil prices spike. Inflation surges. Politics backfires. So the system is tolerated quietly. This isn't a story about one country. It's a template. Any producer large enough and any market desperate enough will eventually adopt the same mechanics. What begins as a workaround becomes infrastructure. What begins as tolerated behavior becomes normalized risk. Once trade learns how to move without permission, it never unlearns it. And here's where this becomes actionable. If you want to spot dark fleet behavior, there are signals you can actually watch. AIS gaps near known transfer zones. Tankers idling offshore far longer than economics justify. Sudden changes in ship name, flag, or operator. Routes that detour without a clear commercial reason. Trade data showing crude originating from places that don't produce it. When those patterns increase, it means one thing. The formal system is tightening, and trade is descending into the shadow layer. That's not just oil. That's the shape of global power under stress. The global energy system didn't break. It evolved. Two systems now run in parallel. One visible, regulated, politically clean. One quiet, flexible, and tolerated. When pressure rises, trade doesn't stop. It goes ambiguous. And the deeper it goes, the less any government truly controls it. That's why sanctioned oil still powers cities. Why price shocks arrive without warning. Why wars stay funded longer than expected. The dark fleet isn't a scandal. It's a symptom. A signal that the world has entered a new phase. Not global trade, aligned trade, and shadow trade beneath it. And once trade learns to survive without permission, the next system to change won't be shipping. It will be money.